Okay, well, good afternoon, everyone. I'd like to start by welcoming our speakers and giving them a special thanks for giving up their time and sharing their knowledge and career paths and so on. And also, I'd like to welcome our students, both past and current students, to this session 2 of the UniSA Property Students Webinar with Industry Leaders. My name is Philip Beaton. I'm a Fellow of the Australian Property Institute. I'm a Certified Practicing Valuer. I've done about 19 years of lecturing in the property discipline at UniSA, and I did this degree in the mid-80s. I was a late starter in my degree, so any of you doing your numbers, I started in about 1985. I would also like to acknowledge that the University of South Australia is on the traditional country of the Kaurna people of the Adelaide Plains. We recognise and respect their heritage, beliefs and relationship with the land, and we acknowledge that they are of continuing importance to the Kaurna people living today. Before we introduce the first speaker, I would like to note the following. The webinar will be recorded. The recording will be only to record the speakers. The recording will not show participants or any questions in the chat room. Each panel member will speak on the topic and will then ask them to answer the questions submitted by the students and registered viewers. Please note that we won't be responding to live chat or raised hand function, as I'm sure you can appreciate with so many online, that becomes a bit cumbersome. Whilst for Michael's sake, we won't be asking you, Michael, what a REIT is, but we should bear in mind that many of the people viewing this, many of our students are first year students and may not know a lot about property. So I might interrupt from time to time when we use a bit of property jargon. I think it's good that we do use the jargon, but I might ask to perhaps explain them from time to time. So we're about ready to go. Thank you again for joining this. So we begin today's webinar presentations about the emerging sector of infrastructure and data centres with our first presenter, David Yule. David is founder and managing director of digital infrastructure at 360 Capital and is responsible for the strategic development and rollout in this key growth centre. He has more than 25 years experience in listed private equity and pension fund finance companies, specialising in the communications and data centre industries. So maybe I'll even start with you, David. Perhaps you could start off by describing what infrastructure means and then please proceed with your presentation. Thank you again.
Sure, and thank you very much for that great introduction. I'm just going to share my screen in a second, but you know, from my point of view, I always think about infrastructure as something that's physical, and then digital infrastructure, we always talk about stuff that supports the growth of the internet, and that's really what digital infrastructure is all about. So I was going to quickly move on to my presentation and talk people through that, and I thought it might be worthwhile starting off by showing people a picture of what a data center looks like inside with all the information technology. You can see there what we call servers inside the data center. So it's a nice clean picture. And it'd be fair to point out that it's a pretty hot sector right now with a significant amount of interest from an investor group point of view, given how much growth with the usage of cloud. So I'm going to walk people through that quickly, and we'll take questions later at the end. I'll just try to navigate the difference. So what is a data center? For those that don't know what a data center is, it's fundamentally a place where data is stored and processed. So on the left-hand side, you can see the words. The picture on the right shows you a room with computer cabinets, which is refrigerated and has significant backup power and equipment. And then typically there's a bunch of people in a control room monitoring the security of the building and the environmental controls for the building. I would like to say, in a nutshell, it's a very sophisticated commercial property play, with the only difference being that the operator of a data center typically sells space in the data center and operates the data center itself as well. But it's a relatively new thing, and I thought it was worth explaining that to people. We look at a market in data centers and think of it in 3 distinct segments. There's a really big one there on the top left, which is what we call a hyperscaler center. And these are massive facilities. That one there is in the desert in Arizona. And they typically take up massive, large blocks of land. The analogy I'd give you for somewhere like Australia would be this is a Western Sydney sort of play, or in the Melbourne, Deer Park or Dermot, right about that area. And there's many of these going up in Australia right now to support the growth of Google, Microsoft, and Amazon, because they are the hyperscalers. In the middle, we have what we call ecosystem ones, and these are ones for typically downtown or in CBDs, where people connect into the internet fabric, and this is where subsea cables and telecommunications networks exist. And then on the right side, we have what we call regional or edge data centers, which are smaller data centers that spoke off of the large ones on the left and in the middle. And these are how you get information and performance of the information technology closer to the customer, because the speed of the response when you click on a screen is fundamentally a function of the speed of light. So the closer that response is to the customer, the better the outcome. You can also see through this slide, I've tried to give some examples of typical customers that go into these. I'm not going to read them through, and I've tried to give examples of operators in the bottom. I heard people talking about REITs earlier on. I'd note that most of the companies in the bottom left in the hyperscale section are classed as REITs and are listed in the US, and most of the ones in the middle box are listed in the US and are structured as REITs as well. The ones on the right, because they're a bit smaller and the asset class is less formed, are typically not structured as REITs, but as the asset class matures, they may well be as well. So what's making data centers hot? And I think if you look at this and you get a good sense that cloud, when we talk in hyperscalers like Google, Microsoft, and Amazon, they're actually growing their businesses about 50% a year. And that just creates this downdraft effect for the need for data centers to store and process that information. And this is what's causing this amazing boom in the requirement to have data centers. You look at the right as well, and I've worked in this industry as an operator, as an investor for many years. The internet also is a huge driver of growth. I'm not sure which one drives the other, but at the end of the day, these data centers are getting bigger and bigger. They're storing more and more information, and we collect more and more information, and it has to be sorted, organized, and delivered out to people. And if you look on the left-hand side here, I've just listed a few of the drivers. I would say right now that the largest single driver is definitely cloud, especially during COVID. And also the streaming media, the quality of streaming media is really forcing a lot of stuff into data centers, because years ago we liked SD, used to be HD, and now it's all UHD, and the processing power required to deliver these things is amazing. And that's before we actually get onto things like 5G and driverless cars. So we love this industry. We're a big backer. I personally have a lot of my wealth tied up in the space, and I also invest on behalf of others into this space. And why wouldn't you with very bullish thematics like this? I'm not proposing to go through the model in detail, but if you're a data center operator, how do you get your money? And I was told this is important. So if you're in a big facility, you rent space based on how much power you can get per square meter, and you'll take an 8 to 15 year lease. But it does look somewhat like a property lease, but it's actually for available power. It doesn't matter whether you use the power, you still pay for it. In an ecosystem model, you buy or rent the space for one of those racks that we saw in the picture in what's a data center, and you might pay a couple of $1,000s a month to have that rack there, and you might commit to a term of about 3 to 5 years. And that has a power allocation and also a usage allocation to it as well. So that's how an operator makes his money, and typically he has a sales force that would sell this type of agreement to end users. So it's a bit unusual in commercial property where you actually have your own internal sales force, but that's reflective of the specialized nature of the asset class. Looking down that list there, and a lot of people balk at this a little bit. If a concrete warehouse costs $1 to build, then to make it a data center will cost you another $9. And that is before you get into the equipment of the racks and the computers that are in the racks. So a large hyperscale data center, which would consume potentially 100 megawatts of power, in Western Sydney, and there's quite a few of them, are typically about $1 billion to actually fabricate and complete, which is a huge amount of capital by most standards and compared to other types of commercial real estate models. Because of this, data center operators are massively addicted to debt. They use bonds, they do sale leasebacks of the facilities to free up balance sheet and fund their capital expenditure. And occasionally you actually have slightly different models which are on the right. So sometimes the operator will own it all. So they'll operate the data center, they'll sell space into it, and they'll own the fit out and the concrete of the building and the land. Other times, because they need capital, they'll actually sell and lease back the land and the building. And then sometimes they sell and lease back the fit out, the land and the building as well. It just depends on how capital hungry they are as well. And this is just one of those things that we've seen evolve. And I think the biggest thing I've seen in the last 3 years is that the debt capacity offered to data center operators has massively matured. And 10 years ago, you would pay large amounts of money because it's a sophisticated asset class. Now you're paying commercial real estate rates for your funding. So, got to the end there a little bit quicker than maybe I was expecting. But I think from my perspective, and I wasn't quite exactly sure where people were wanting. I was trying to give some of the dynamics around pricing. I think the biggest thing I'd say right now, and this is a bit unusual for commercial real estate, because of the growth that we're seeing in demand for cloud space and data center space, we've got a significant imbalance in countries like Australia and across Asia around supply and demand. So we're actually seeing prices actually hold up really well. We're seeing lease lengths get quite long. We're seeing yields for building owners go down because the cost of debt's gone down significantly as well. But we still have this shortage of available land and facilities, because the biggest issue holding back the development of data centers in large cities is typically the availability of large amounts of power. So with that, I was going to stop sharing and take questions when we get to the panel question session. Thank you very much, everybody.
Thanks very much, David. That was great. Yesterday's session, it was fantastic because we were opened up and opened our eyes up to so many different areas of property and the kind of career paths that our students can take. And this is pretty new to all of us. Maybe not you, but this is really interesting stuff. And I know in our evaluation studies we talk about units of comparison, and typically it's rates per square metre. But it seems like your area, the unit of comparison is very much related to the power. Yeah. And the availability of power. So I guess that's a challenge to valuers, something they have to learn and keep learning about. It's also interesting to see how the funding has become more affordable. The rates obviously have come down as these data centres become more acceptable as a investment, I guess, yeah, and more acceptable to bankers. And so that seems to have had effect on capitalisation rates. Yeah.
And to give you a sense there, if you look at actually the whole listed sector in data centres, it's about $200 billion right now. So it's not exactly a small asset class.
Fantastic. Well, thank you very much, David, for that, and we'll chat to you later in the Q&A session. Well, David Beaton. Hello, David.
Philip or Dan?
Look, I know I'm quite willing to accept Your Honour or Sir is acceptable, but I suppose Dad's a bit tough. Anyway, thank you, David, for sharing your time here. I know last year you were involved in the Sydney trip and the students loved it. And it's a great stuff to listen to. So David Beaton is the investment director of John Lang Group, a British investment group. He's an infrastructure professional with more than 11 years of experience in bidding, advising and managing major PPP or public-private partnership and renewable energy products throughout Australia and New Zealand. So, David, over to you, mate.
Great, thanks for that introduction. I think I'll as well try and share my screen. Can people see that okay?
Done. Yep.
Okay, there's a challenge for the day ticked off. So as per the introduction, I work for a company called John Lang. We're a UK listed company. It's been established here in Australia about 10 years now. And we, I guess, invest in infrastructure and renewable energy assets. We invest with our own money. We're not a fund manager. And we typically invest in projects, we call them greenfield projects, where we're, I guess, acquiring a project before it's been built. And we'll then, then sort of own it through construction. That's typically the riskiest phase of these projects. And then, then once the asset's been de-risked and into operations, that's often when we'll look to, sell it or recycle capital, and that's often how we aim of the game is to sort of try and make our money by sort of buying something when it's risky at a higher IRR, and then de-risking it and selling it later. This first page really just to sort of show what we've been doing in Australia, and just to give sort of people a bit of a feel around the different type of assets we own. I think really it's sort of in two categories. One of them are in sort of, as you sort of said, PPPs, or public-private partnerships, which are sort of a form of long-term contracting with government. It's sort of you enter into a contract with the government, and that contract sort of covers a construction period and then a long operational period, anywhere from sort of 10 to, usually from sort of 20 to 30 years. And the private sector will be responsible for, I guess, funding the construction costs, actually building, we'll enter into a building contract with the builder, and then enter into sort of a long-term maintenance contract. And it's really then only once the sort of the project is operating, the government will start making payments, and really sort of when equity, as John Lang is, or an equity investor, starts getting its return once the project's into operations. And you sort of see from the, I guess, from the list here, I guess the sort of the wide range of sort of projects. And we've invested in one of the best assets we had was the Optus Stadium in Perth. We own, number 2 on the list is Australia's largest prison that opened a couple of months ago. Touch wood, no one's escaped that prison yet, so that's looking like a good investment for us. A lot of these are big, complex projects, and that have a lot of challenges with them. I think probably everyone in South Australia would know about Royal Adelaide Hospital. It was a project that certainly had its challenges, a lot of issues with contamination and delays with the builder. And that's a project we've been involved with for 9 or 10 years now, and it's a good example of where complex infrastructure is where governments will sort of procure it through a PPP approach. Other ones here, we also do seem to like a lot of rail projects. Sydney Light Rail is one that opened up last year. Again, not without its challenges. 12 months late, probably about $1 billion in overruns. Large, complex projects. So the bottom half of this table sort of shows really what we've done in the last 3 or 4 years and push into renewable energy. We now own one of the sort of the largest portfolios of operational renewable energy assets in Australia, and that's across a mixture of wind and solar assets. So that's sort of a really good mix of, I guess, the John Lang portfolio. In terms of sort of dollar values for us, it's sort of over $1 billion of equity we've invested into these projects. A lot of these projects we haven't been all the equity. Some of the projects we're sort of minority equity, and then often we've got 80–90% gearing. So I think it's over sort of $15 billion worth of sort of infrastructure projects, which we've sort of been, I guess, been involved with in the last 10 years. I guess this sort of last slide, really, I just thought maybe a good way. I know you're sort of all going through your property degrees at the moment, and perhaps a few of you sort of, I guess, wondering where are sort of the obvious differences, I guess, of, say, a property investor versus an infrastructure investor. And I think David, you'll some of these will be things that are, I guess, familiar with data centres and some of the, I guess, differences. But perhaps just walking through some of them. And the first couple of ones are not particularly obvious to property investors, is that normally with infrastructure projects, we're not actually acquiring the property at the beginning. For a lot of those large PPPs that were projects that the government brought to market, usually it's the government land that government gives the project the land. If you take the Royal Adelaide Hospital, that was built on the old train station on the edge of Adelaide. That is land that's still owned by the government, and at the end of the concession, that will be given back to the government. So never do we usually have to buy the land. I think in all of the 15 assets that John Lang owns, we don't own any of the land. Renewable energy is a bit different. Sometimes you might own the land, but more often than not, you'll enter into a long-term lease with a landowner. You take the Hornsdale Wind Farm, that project, it's got 99 turbines up in Jamestown, north of Adelaide. I think those turbines sit on about 21 different landowners' properties. So we've entered into 21 long-term leases with the landowners, which gives us access to build the turbines and then access to run them for 30 years. Next one on the list, no residual value. So typically at the end of the project, especially for our PPPs, these are usually assets that will run for 50 or 100 years, but often if they've only got a contract life of 25 years, that'll be an asset that still needs to be used, and that'll be given back to the government at the end of it. So there's actually no, needing to work out what's the capital growth or uplift that you'll get at the end of it. Typically it's handed back to government for zero, or on our renewable energy projects, you model that you'll have these assets run for their whole design life. And so then at the end, you're pulling them down, decommissioning them, scrap metaling them. You're not actually, because you never owned it, you're never actually selling the land. So you're not needing to factor that into your calculations. Next one is a very, what does your revenue profile look like? This is, our revenues are not through rents from tenants. Our PPPs will be through revenue from the governments. But on our renewable energy assets, we are actually owning power stations and selling electricity into the market. We also own a waste to energy facility. So we're earning revenue from local councils who are dropping off the waste. So for us, you've really got to understand, that revenue sector. And it's not just rental revenues. In terms of gearing, it's David could testify, I'm sure you've seen levels of gearing increase over the years and data centres. It's not uncommon for us on PPPs to see levels of gearing at about 90–91% on our projects. So that means for every $100 that a project needs to be funded, we're able to get $91 from the banks. So very high level of gearing allowed in these projects, which is unique to probably a lot of other, property investments. Few comparable transactions is the next one. These are, unique, one-of-a-kind assets. Sadly, there's no rpdata.com to log into to see 20 comparable deals. These are, often very rarely traded, and the ones that do trade are usually understanding the price can be very difficult because they're protected with confidentiality. So, I'm truly understanding what the value of your assets is can be really tricky because there's no observable market out there. Significant investment costs. So for John Lang is a good example. Our minimum investment requirement is around £25 million. So anything smaller than that, we won't look at. That's probably at the medium end. So, very difficult for, mums and dads to invest in infrastructure or, lower range. There is some listed infrastructure funds out there, but for, I guess, direct infrastructure investments, it's typically in investment amounts in the tens of millions of dollars at the least. Next one is long construction periods. Royal Adelaide's a great example. That took about 6 years to build from start to finish. We've got a train project in Brisbane. I think that's been about 5.5 years now, and they're only just getting sort of completion on the final trains. So very long sort of periods where you're investing money into the project before you're getting a return, which is, I guess, sort of different to probably what you're seeing on shorter, quicker built residential projects or property projects. And look, and the last one is government engagement. As the term PPP, public-private partnership, these are projects that are procured by government. You're doing a lot of work with government. It doesn't always go as smooth, as easy as you'd like, but it's just sort of something you've got to deal with, with heavy government involvement right the way through. But they're the sort of, I guess, the 7 or 8 bullet points that I sort of thought were, I guess, sort of showed some of the differences between property investing and infrastructure investing. Over to you, Philip.
All right, David, thanks very much for that. Maybe you could stop your sharing now. Thank you for that, David. It was great. Yesterday we spoke, I'm kind of addressing this to our students that are listening. We spoke lots about purchasing and managing of assets, whereas what you do in your area of work is more on the construction, really, and putting together the deal, and over a long period of time. And your spreadsheets would be phenomenally long. I remember you telling me you were dealing with spreadsheets earlier in your life there with over 1,000 columns. So the students that are doing commercial property valuation with Dr. Joe, get used to it if you're going into infrastructure stuff. And also, David talked about comparable sales. I mean, now David hasn't done a property degree. He's got a couple of other degrees, but he hasn't got a property degree. And we bang on all the time, don't we, Joe, about comparables? So it's not just in property that we need to think about comparables when we're assessing values and so on. So thank you very much, David, and we'll see you later in the Q&A. Thank you. All right, so our next speaker is, for this topic, is a UniSA graduate and Executive Director and Joint Chief Executive Officer for Aspen Group, a publicly listed company, Mr. John Carter. John and I worked together many years back in JLL. And John's also been very supportive of things we do at university. And last year he employed one of our graduates from last year, Em and Wynne. And so thank you, John, for that. So John has over 30 years experience in real estate and financial markets. In 2004, he established the Mill Hill Capital to pursue investment opportunities in real estate, agriculture, and equities. So John, nice to see you again. You're on stage.
Okay, thanks, Philip. I'll just share my screen as well.
Yep.
All right. So good afternoon, everyone. I'll just go through a few slides to try and quickly.
Now I can't just interrupt, John. Sorry, I can't see you your slides yet.
Okay. Does that work?
That's well done, mate.
Okay.
Off you go.
Good. Pass the first test. All right.
So looking at a distinction at this stage.
All right. So look, I thought I'd just explain Aspen, which is, I think, is a one of its kind REIT. So just trying to explain what we do. So we focus on residential, retirement and short stay sectors. We think that the investable universe is about 7 trillion. So we think it's the largest asset class available in Australia. So whilst we're relatively small at the moment, we think there's plenty of opportunities. As was said in the introduction, so we're a listed real estate investment trust. Our focus is unique in that we're focusing on really the third quartile of either buyers or renters. So we're not in social, but we're in people which have got some money but are not above the median price or rent. We think the space is a great space because it's very hard to disrupt through technology. You still need to stay in a place. It's very hard to sleep in your phone. We often sort of achieve the below average price or rentals by buying assets well, and they're often brownfield assets where there's significant issues to work through. So just to explain the various options that we have. So we will rent dwellings either on a short-term or a long-term basis. We provide a shared equity option, which might be like land lease, where we own the land and we rent it to someone who owns the home on the land, and that gives them a cheaper entry price than buying a freehold. Or the final one is that we also sell dwellings and land. Just looking at where we are at the moment and some of the options. So these are some of the assets that we own in the portfolio at the moment. So the one on the left, houses, the photo is missing, but we own a portfolio of mainly single detached dwellings in Perth. Our average entry price is $252,000. Our average rent is about $350 a week. We think the replacement cost of those new is about $400,000. So that's a really nice trade. We bought the assets last year, pretty well at the bottom of the Perth market, and we think we've got a lot of protection there and good upside. Next one is apartments. So that photo is of some apartments we own in Linfield here in Sydney. Again, we think the replacement cost, including land, is over $400,000. The rent is very low because we've got a mixture of retirement tenants on low rents and residential tenants. The third one is a mixed-use park. So an example of this is Highway 1, which is in the Adelaide metropolitan area in the northern suburbs. So we have a mixture of tourism, some permanents, and in some cases we also have land lease in those parks. This gives you, in the portfolio, the average per dwelling or site and the average rental. The fourth one is a land lease. So this is a relatively new concept to South Australia, but has been in place in New South Wales and Queensland for 20 or 30 years. And what happens here is we own the land. You typically build the dwelling on top of the land. It's in theory transportable, and the purchaser buys the dwelling and pays us a land rent. So you can see our average rent is $169. One of the attractions of it is that the owner can get Commonwealth rent assistance. So the traditional retirement village structure, above a certain number, it's very hard for the owner to get Commonwealth rent assistance. So that's typically for people over 55 years of age. The rules can change from village to village, but it's not designed for young people. And then the third one, or the final one on the right, is a picture of our workforce accommodation in Karratha. So that's in northwest WA. And again, this is something that is leased to Woodside. We built it for Woodside. They're still the tenant. And Karratha currently is going through a pretty strong period. So just turning over. So just looking geographically, we have a big weighting to WA. We have a big weighting to South Australia and a big weighting to New South Wales. WA, we think, is a pretty interesting market where it's due for a pretty good uptick. South Australia we like because it's a pretty stable market and there's good value. And New South Wales is where we're located, and we still managed to find some good deals. We also are in NT. We own a caravan park up there, and we've just entered southeast Queensland, which we think will be prospective. One of the ways, this is a lot of information to go through quickly, but one of the ways that we get higher returns is by buying assets that have some upside. So it can be in the form of developments, which are Sweetwater Grove and Four Lanterns are, DAs to extend it and to build new manufactured homes on land lease. The refurbishments are buying brownfields and converting them into something better where we can get higher rents. Cooks Hill is one where it's an old boarding house that we are going to turn into fully self-contained rooms. And Burleigh Heads is our entry into southeast Queensland, and we need to just complete the town's houses. And we think we'll get into it at sort of 2/3 of market value. And then just coming to future projects. So one of the assets in Adelaide, which some of you may know, is the Adelaide Caravan Park, which is at Hackney on the Torrens River. So that is a caravan park, huge amount of land value. So we're doing a master planning exercise at the moment to look at whether we should make it a denser sort of residential estate. So turning over again, I just wanted to talk about one of the things that we're working on at the moment, which is how you solve the problem of creating attractive but small accommodation, which we can make a good return out of, and still rent at a low rent point. So we have worked with a supplier at Highway 1 there in Adelaide. The picture that you can see there is of a Zod box. So these cost us about $70,000. We have the land, 70,000 connected, and we've just in the process of renting these out, and we think we'll get about $250 to $275 a week as a residential long-term rental. So the return on that exercise is about 15%. Small product, but really livable, and we think it'll be a low-cost place for someone to live, and just a good option. So, an exercise which is difficult, but we're trying to work out how you do this and provide good accommodation, but still get sensible returns. So Phil, that was really the things I wanted to go through on my side.
Yeah, thanks very much, John. That was fantastic. We talk. Oh, perhaps you could de-share your screen. Well done. In the property area, we all know about highest and best use, and so it seems like you are seeking out sites where you can, in fact, establish a higher and better use, but particularly in this residential retirement class, and seeking out, a niche in the market. So it's a substantial market. I like your idea of high-tech cabins, John. I mean, David in Sydney's got quite a big backyard. I'm wondering whether we could do something there. But thank you very much, John. As I said after David, I think that, we're exposing our students to these incredible wide range of things to think about when you're doing a property degree that can inspire you. There's so many classes of property we can think about. So thank you very much, David. That's John, that's much appreciated. So now we've got a bit of a Q&A for you guys. Rightio. So I'll ask the first David Yule. in your field of property, so these are from students. So I'm reading the students' questions. In your field of property, what do you think are the key areas of expertise required to be successful?
I think you need a good understanding of what the operator is going to want, so that you can present the right property or the right area to them. And given it's quite a sophisticated property class, I think you have to do a little bit more than say, here's the piece of land. So we rely very heavily on knowledge around power availability and planning conditions locally.
So how do the data centres fit in a zoning sense?
They're typically in sort of light industrial from that perspective, and really need to be away from residential, because when the backup diesel generators kick in, it's quite noisy. So we typically seek light industrial areas like Western Sydney or Dermot around Deer Park, where you get logistics centres.
And is the industry, your sort of sector of the industry, the property industry, new, so new that you have to almost sell the idea to bankers, or are they sophisticated enough to know enough about data centres to understand risks and so on?
I think there's a select bunch of them that understand it, but most of your regular banks wouldn't get it.
Yeah. Okay, David Beaton, if you were employing a graduate to John Lang, what are the sorts of things you'd be looking for? Not only technical, but personal traits.
Thanks, Philip. And I mean, from a personal traits, I mean, in any sort of line of work, you're going to be working with someone for many hours of the day. So you want someone that has a good attitude, and someone that you feel like you could spend a lot of time working with. I think in the line of work, it's, very challenging work. So you want someone who's not afraid to roll up the sleeves, and I guess has a real go-getter attitude. That'll be the key things that we're looking for. But as well, you want someone that's got good grades, and someone that's, got the sort of the right work experience. Certainly more than just, what your uni grade average was coming out. It's, I think, very important, how you gel in an organisation. And in our team, when we hire anyone new, we usually have an exercise where, nearly the whole team will meet that individual, just so you can really sort of get the view on everyone on whether we like them or not.
Mm. Yeah, thanks. We talked about that yesterday with a number of the speakers, that as some sort of encouragement for students that may not be top of the class. I'm talking to them, that don't be despondent. As David said, we tend to work more so with our working mates than perhaps our partners and so on. So we need to be able to get along with people and work in a team. And maybe that's a good reason why we have enough, as many sort of team exercises at uni as we do. Students get a bit sick of them, but the fact is that most of us do have to work in teams and to get along with people and be able to absorb ideas and so on. John Carter, do you think how do you think the COVID thing might impact on your business in relation to, is there a possibility that we could all decide, if we're not required in the office 5 days a week, to not live in one of your high cabins, but will it have an impact, do you think, in some of your housing in regard to not necessarily wanting to live as close to the CBD as we all kind of want to?
Yeah, look, it's a great question. I think the first thing is that when COVID happened, we removed our guidance, like most real estate investment trusts, to the market, and we just didn't know what would happen. What actually happened was that we could adjust the business, and we turned short-term accommodation into longer letting. We actually made guidance. One of the interesting things out of COVID that we've seen is that we have 2 projects in funds in South Australia. One's in the Adelaide Hills at Woodside, and one's at Hindmarsh Island, Coorong Keys. The land sales at both of those in the last few months are up massively. So is it coincidence? No, it's not coincidence. So there's a grant, and I think that's triggered. In South Australia, you can buy, a block of land, at Hindmarsh Island. We can sell one for 100,000 at and at Woodside 150,000. So they've got a 25,000 head start, which is material. The second thing that people have thought about is that even though Adelaide's not a big city, some of them are deciding that they can live and work away from the city successfully. And so they're decamping to places like Woodside and Hindmarsh Island, which are still commutable if they have to, but they have a bit more fresh air. So that's a very interesting trend. We think that we look at a few markets which are close to major cities. Southeast Queensland is one, and Newcastle is another one. Both of those markets, which are close to major employment bases and education and hospitals, we think they're going to be beneficiaries out of COVID. So we think about that a lot. The other very interesting thing for us is that WA, which has been completely locked away from the rest of Australia, it's the rental market in Perth has gone gangbusters. The vacancy rate has halved in a couple of months because all of the FIFO workers now have to essentially rent in Perth. So there's a whole lot of things that you sort of don't initially think about that have actually occurred out of COVID, which has actually been generally beneficial. What has been very difficult for us is in certain locations, short term, revenue is down massively.
Yeah, so there's a sort of few balls in the air there, aren't there? But overall, your business plan is being, materially impacted or reassessed by COVID.
Yeah, look, I think we've only been managing it. I've been on the board for a number of years, but we've only been managing Aspen for, let's say, 18 months. When we came in, we wanted to get more of the revenue out of residential and longer term leases. And so the things we've bought do that. So we think we're quite well protected for changes in the market. And the other thing that we've been trying to do is to get a little bit more development income. So it's played out all right for us. We still think we'd make more money if we didn't have COVID, but we're actually doing very well at the moment.
Thanks, John. I've got a couple more questions come in from students. One is to, I think, probably best for Dave, about a hot stock called Snowflake. So the question is a little more in-depth description about the function of the current stock hot stock Snowflake and why a company like Berkshire Hathaway would suddenly invest in this branch of the IT sector. What do you think, David?
I think he's trying to get in the wagon, and get in the theme. He probably missed out on a lot. Look, I think it'd be fair to say that in the cloud platform space that uses the large customers, the data centers, the stocks are hot. You get it right, you take off. Zoom's a good example as well, and there's a multitude of these platforms. I would caution people. There's the thousands that you don't hear about that go nowhere, and people lose all their money. So personally, I prefer infrastructure because you've still got an asset base, even if it doesn't go quite as well as you'd expect. Whereas a lot of these platform plays, it's binary. You either make a lot of money or more often than not, you make no money and you lose your money because there's no asset backing. It's intellectual property and thematic. But, good luck to anybody that gets in on these things. And I think Warren's just getting on the wagon. I think I'd also add one last point that when you get somebody like Warren going into these stocks, it's almost like a self-fulfilling prophecy. They move the market and they make it successful. And I think a lot of people that sit on the outside don't understand how much big names are coveted by stocks at IPO so that they can cornerstone a large part. But they do it at a price and they make a lot of money from it in most cases.
Yeah. Thanks, David. We've got two more questions in relation to data centres. I'll ask David Beaton one. Do you think that you'll ever see data centres being run by renewable energies?
Look, good question. I mean, data centres require a lot of power and they need power to be almost guaranteed at site. If power goes out on a data centre, then that's the worst that can happen at exactly. So you need a really reliable source of power and sticking solar panels on the roof and a wind turbine out the front, you know, might get you the power most of the time, but probably wouldn't all the time. And I think you find as well, you know, most renewable energy projects are getting built. No one wants a wind turbine anywhere near them, so they're getting built way out in the countryside, which is very different to the data centres, which are getting built, you know, much closer to where, you know, the data is needed. You know, I think we are going to see, you know, companies want to be saying they're green, and there's the Facebooks and Amazons saying they want to go green, and they will look to buy renewable energy projects, and that they can sort of say that's how they're staying green, but it's essentially, it's not power from a wind farm, it's powering a data center. It'll be sort of buying electricity from over here, from a renewable energy facility, but you still got your power to your data center separate.
So that's one of the issues with renewable energy, is it, or at least solar, is the distance, a locational thing. That most of the, is it right that a lot of the solar farms, like the one you've got outside Mildura, it's a long way from where the power is needed? Yeah,
look, that's right. I think there's probably been some renewable energy projects that have been built too far away from where the load is. If you take things like you know, wind turbines, which are very visible, and you know, usually a lot of people complain about wind farms, they're getting built a long way from any population, and that's where there's a lot in South Australia, a lot up near that sort of Jamestown region, which is sort of 200-300 kilometres away. I think that, as you expect, the closer you get to the cities, the more expensive the land is, and you know, returns that are not there.
Yeah. So for the students listening, you know, we also bang on a lot about locational issues, and you know, it's a good location in relation to what. And so you're saying a good location for a renewable is location in relation to where the power is actually needed. Thanks, David. So the other David, John, you've had a good run here, haven't you? You've missed out, but you handled the first one well. David, the question here from a student, what about the future for data centres? Is it just going to continue on an exponential pathway?
Well, I mean, I think nothing ever does apart from internet growth. So I would say, look, we would see we'd probably see it long term mature into a standard commercial property class. But for the next 10 years minimum, you're going to see this stellar growth continue. There's no technological changes in data center technology like cooling or servers and stuff like that that's really going to change the world. So I think at the end of the day, a data center is a big refrigerator, you know, and with really good power. And we think it's going to grow and grow and grow. So we see lots of opportunities.
So as a product, is it highly sought after by institutions?
Absolutely. You know, we've seen, I would say businesses in this space would sell like 10 years ago for multiples of 15 times earnings. We're seeing companies trade at 33 to 35 times earnings right now.
Sort of seeing a 3 or 4% cap rate in that range.
Yeah, and there was a recent transaction in Melbourne on a sale leaseback at one of the Telstra facilities on a 30-year lease, and that went through at 4.2% on 400 odd million. So as people chase yield, you know, in the world of interest rates is zero, that sounds like a reasonable outcome to some people.
Well, it does. I mean, in the fact that a specialised property will, in normal cases, you know, require perhaps higher cap rate, but it's obviously there's a very low cap rate, but specialised. Yeah. So there's a lot of confidence in that area.
Yeah.
Okay, just a moment.
We'd piled into data centres 5 years ago. So,
what's that, David?
John Lang wishes we'd piled into data centres 5 years ago. It's been a huge growth story, and it's a very hot sector at the moment. It's been very successful, and I wish we'd jumped on earlier.
So what sort of hot sectors is John Lang looking at now?
Oh, look, we're still PPPs is our sort of main breadbasket, complex construction projects. That's where we prefer.
All right, just very quickly, I'll just mute from. Okay, we've got 5 minutes, so I'm going to go around and ask a question that I asked yesterday of all the speakers. So we've actually got 3 wise men, haven't we? I can be politically correct there. John, you can be the first wise man. What advice would you give to a young property student?
Okay, so we're talking about a first year or second year student?
Yeah, I mean, a lot of our first year, and of course, I'll be very politically correct, some of them aren't so young. But a property student, what sort of advice would you give a property student?
I think there's a few things. One is try and get a part-time job while you're studying.
Yep.
You know, can be in the property sector, but even if it's not, I think if people don't work in the property sector and they get an understanding of operating businesses, like working in a pub or something like that, they just need to understand the connect between a business and the underlying real estate is a really good thing people understand. I think the networking early on, some people are really good at it, some people aren't. I think the people that are less good at it should put the effort in and try and network because it does help you. I think you've got to be open to opportunities. I think one of David's mention of how you get on with people is important in the working environment, and learning those skills of listening and contributing. It's probably not that PC, but just a test of do other people want to spend time with you in a social setting. I think it's very important if you want to get ahead to try and be competitive and think about the future, how you're going to gain experience, consider further study, and that's all about setting a path. And I appreciate it's really difficult early on to understand where you might be heading. The other thing which I learnt early in investment banking is read the paper, right, and keep up with things. And it's either the paper or online, but do that every day and get to understand the business world, not just the property world.
Yeah, well done, John. It came up yesterday again that our students need to sort of get engaged in property, get into it. And I like your idea about even a job in a pub. They could talk to whoever their boss might be, what sort of tenure they're on, what term lease, or start to think about the property implications of their part-time job, which might otherwise be not relevant to the property area. But one of the things for all the listeners, and yesterday they heard me say this again, but the idea of this webinar, which has been put together so well, is just to excite students about the kind of opportunities in property. So that might help them when they're in their first year and wondering, oh, gee, another assignment or exam coming up. It's all part of developing their plan, their life plan, which as I stated yesterday, you can never really plan it. You just have some sort of vision, and it'll change over time. And today's been really good to give students some more ideas. So David Yule, what do you think about just some couple of comments on what students should think about?
Look, I think Stephen was pretty, accurate in his description. Or I would say get into the workforce as quickly as possible, even if it's on a part-time basis, because you'll very quickly find out what you don't like, which is just as important as finding out what you do like. And find something eventually, hopefully, that resonates with you personally within the sector that you're in. He's really on the money on getting to know the businesses that are going to potentially rent the space, or the people that might live in the home. And you got to work hard. There are no shortcuts. If you're going to establish yourself in an industry as a major player, there is a lot of graft, a lot of reading, a lot of meetings, a lot of thinking differently. And I say from my personal experience, and it's an area of discomfort for me, the calls don't come into your office. If you sit in the office waiting for business to land on your desk, you will not do as well as the person who's out there having coffees, having a drink, shaking the tree, for want of a better term. That's the difference between somebody who's okay-ish to somebody who's going to be exceptional, because knowledge is everything, and you don't know when you're going to pick it up. It's not structured as you think, but you can have some structure, but a lot of it's very informal.
Yeah, well done, David. I like that. Yeah, it's very rare that someone comes in and says, "Hey, this is a fantastic idea and it's going to cost $1 million." Make you $1 million or 10 times that. We've got to go out and seek these things. And so from a personal point of view, our students have to kind of get out of their comfort zone.
Yep,
As someone
absolutely.
said yesterday, don't be uncomfortable about being uncomfortable. You know, get out of your comfort zone and push yourself and sort of sell, don't tell, if I can use that corny kind of phrase. Yeah.
You know, we used to always do this thing that, you know, my boss used to always ask me, write down 3 things you're going to do this week, and then tell me at the end of the week, did you do them? And then tell me what the 3 things are for the next week. And it sounds stupid, but it's not. And it's just about creating that activity program that gets you there.
Okay. Thanks, David. And David Beaton, what do you think?
Oh, look, I think John and David have covered it pretty well. You know, I think a lot of, especially for people, you know, if it's your first job at uni, I mean, I don't think anyone's going to necessarily fall into a job that they love 100% of the time. I mean, a lot of you will come in at the analyst level and might have to do long hours and jobs that you're sort of not naturally loving, but I think you just got to really stick at it. You know, bosses will know that they've given you rubbish jobs, and they will notice if you sort of do it well, and that is sort of something that people will notice. But I think as well, you know, for anyone, and even, you know, for people all their career, always asking questions. You know, if you're not sure on anything, ask questions and not be afraid to sort of, you know, be uncomfortable and challenge things, and because everyone's sort of able to keep growing. So a couple of additional things, but I think otherwise it's been covered pretty well.
That's good, David. Thank you very much for that. Look, we've had some fantastic advice from these 3 speakers. So thank you, David and John and David. Thank you very much indeed for your time. And if you're clocking out now, we'll have a great afternoon and a good weekend coming up. Thank you again.
Thank you.
Thanks and good luck.
All right. So have we got Michael? Okay, could the panel now, there we go, Michael. Hello, Michael. And Carmel, could you put your videos on now? Thank you very much. That's great. Okay. All right, so we'll now move on to our final topic, and one that's we're sure that everyone will find pretty insightful and interesting, and that's career advice top for post-COVID graduates. So we've got a incredible range of people here, and it's going to be fantastic. So first of all, we're going to welcome Michael Smith. Michael, g'day, Michael. Michael is a brilliant young man. Well, most people, Michael, are young from my perspective, unfortunately, but you are a young man. So Michael is Regional Chief Executive of Europe and USA at Mapletree Industrial Trust Management Limited. He is responsible for new and existing business in Europe and the United States. He's also Non-Executive Director of Mapletree Industrial Trust Management Limited and a member of the Singapore Stock Exchange Disciplinary Committee. That's quite a big word, disciplinary. And Michael did his property course at UniSA, and I might say Michael's also a very generous supporter of many initiatives at UniSA. So Michael, nice to see you again, and over to you. You're on stage.
Thank you. It's a nice day in Singapore. Hope it's a nice day in Adelaide. It's good to be here. In careers, I haven't prepared anything, but I do think that what the university course provided me was connectivity. You know, John Carter, I'm not sure if he's still on, but meeting people like John and sort of leading industry people like Andrew Pridham and Mark Steiner, Darren Wren, Phil Redmond, Caroline Burns, you know, it's an incredible opportunity in our course, given how well received and how, not just in an Australian context, but a global context, how highly regarded the course is, that having people that you're sitting next to in a lecture, you know, you may end up still knowing them 30 years later, like I do. So just make sure you stay connected, because that is something this course really provides. The other element I guess it gave me, it was I got a scholarship with Jones Lang and Phil. I think that's where I first met you many years ago. And there was a bunch of us who managed to get the various scholarships that are on offer at the university. I was fortunate to leave Adelaide very quickly as soon as I got my scholarship, and I went to Sydney. And then 1 year later, I was in Hong Kong. So I've been up in Asia now for about 30 years. I think Guernsey is a similar, Caroline, you're a similar vintage of being up here. We're not just tax refugees. There is a good reason to be up here. I joined John Carter and Pridham and Steiner and a few others back in Sydney in the mid-90s, where I was, where I returned back from Hong Kong to pursue an investment banking career. And that was very fortunate because there was a lot of REIT activity back then. Westfield was doing stuff, and AMP and a bunch of others, as Carmen would remember. But Pridham was quite a visionary. Andrew Pridham, who now is, I think, chairman of Moelis and chairman of the Sydney Swans, among other accolades, and Pridham Hall and everything else about Andrew Pridham. But he is quite a visionary, and he had a view that the Asian REIT markets would mature, would form and then mature. So he sent me back to Hong Kong in 2000, and that was just exactly the right time for when REIT really did explode. So working on the first REIT in Hong Kong, the first REIT in Singapore, the first REIT in Tokyo. You know, in Singapore now, it's a $120 billion business from nothing in the early 2000s. So being part of that, which was university, USA real estate course, meeting the right people, being in the right place at the right time, was, you know, very fortunate. But you know, you have to create your own sort of luck. And watching the REITs explode in Asia, watching the real estate companies out of China and India list in the mid 2000s, watching the casino companies and being involved in the big gaming companies as they listed in Asia. So all these sort of different trends that happened across Asia in the real estate space, and I was just a fortunate beneficiary of being involved in a lot of that. Along that path, I met Mapletree in the early 2000s. Mapletree is owned by Temasek, which is the Singapore government investment arm. It's a $300 billion private equity shop, effectively. We helped create Mapletree in the early 2000s. One of my sort of better clients is an investment banker. We did 4 IPOs. We sold maybe $5 or $10 billion of real estate into Mapletree. So when the opportunity was, as Mapletree was growing from a Singapore to an Asian to a global business, to join Mapletree and run their Europe and US business, I said sort of goodbye to Goldman Sachs partnership and go to Mapletree. So that was 2017. At that stage, Mapletree had about $40 billion of real estate. We're at about $65 billion now, and about $20 billion of that's being deployed across Europe and the US. So I think the two Davids were talking about data centers. I was fortunate that our first foray into US was data centers. We bought about $3 or $4 billion US of data centers in 2017, which has been fantastic. You know, owning hyperscale data centers in North Virginia, with Google and Facebook and Amazon as our major tenants, turned out to be the right sort of bet. You know, back in 2017, nobody was really buying data centers. Now everybody wants to buy data centers. In 2018, we switched to logistics. We bought about $7 or $8 billion of warehouses, 300 warehouses across Europe and the US, which was also quite fortunate because everybody wants to buy warehouses now. So it's more challenging for us now to be in the asset classes that we'd like to be, because everybody is switching out of shopping malls and hotels and other sectors to be in the e-commerce and to data. So right now we're spending a couple of $1 billion on suburban office. So we've got a great office complex in Silicon Valley, a couple on the east coast of Europe, so the east coast of the US, one in the Netherlands that we're exclusive on. And it's quite opposed to what the world is thinking right now. Nobody wants to be in office. It's the end of office. We're in an office building in Dublin. We had been negotiating with Google for 11 months to sign a lease, and they walked away just before they signed it, which was pretty painful. But you know, you've got to be sort of at the head of the curve, and we think suburban office with lots of car parks that are leased to technology, healthcare, and pharma over the long term is going to be the right thing to do. So it's staying ahead of the curve. It's making sure that you can deploy capital in the right places, in the right markets, and it's good to have a global sort of overview about different opportunities that are happening in Poland or Pennsylvania or wherever it may be. And I don't think if I didn't sort of start up the course and have all the opportunities that the course gave me, I wouldn't be in the position I'm now. That's probably the end of the speech.
Thanks very much, Michael. That was great. You know, like a lot of our speakers yesterday and today, you're very humble. Despite having an incredible role, specifically in the Asian area and having a significant impact in that market. And for our students listening, it's a great lesson that, you know, we're in little old Adelaide. We all love Adelaide, but there's bigger, perhaps more exciting places elsewhere. So go and look at them and don't be afraid to sort of get out there and explore. And for the students, all of us past graduates, we know this, but you know, there is I've heard this several times about the Sydney market talking about the Adelaide property mafia, and that's us. That's from this degree, and so we're very proud of that. And it seems to be quite true. I hear it from time to time from recent graduates that hear this term. So the ones that are studying with us, that are listening, you've chosen well, and the sort of things that Michael has told us about his life is really interesting. And it sounds like the timing. You know, you well, might ask these questions later of you, Michael, about the timing and so on. And in the meantime, the students perhaps would be worthwhile looking up Mapletree and learning a bit more about the group. So, Michael, you talk of billions of dollars. You know, it's an amazing feat, and well done, and thank you for your contribution today. And we'll see you later in the Q&A. Okay, so our next speaker is Quentin Shaw, also a UniSA graduate, who's asset management and transaction at AXA Investment Managers. With over 30 years experience in the Australian property and funds management industries, Quentin has held a variety of senior positions encompassing valuation, research, agency, capital transactions, and funds management. So welcome, Quentin, and thank you again, anticipation. And you've got the mic.
Thanks, Philip. So, look, I thought I'd take a slightly different approach and reflecting on the last couple of years where I was fortunate to have these sessions face-to-face with a number of students and a few drinks afterwards. One of the questions that came up a few times was, well, you know, how did I get to the position or various positions that I've been in, and what was my career path? You'll be pleased to know I'm not doing a PowerPoint either, so I'll just walk through and I guess talk about my career going back now nearly 40 years. So I'm pleased you think it's only 30, but I've got a bit of age under the belt. But actually go back before then down to the dark age of 78 when I was leaving school. So. And then walk through the career, pick up, I guess, some of the things that I've learned or hints along the way, and then talk about, I guess, some hints and tips for the students. So back in 78, finishing my school, I guess I was very lucky to be one of the few people who had a clear view on my career and what I wanted to do, and very few people have that. And I knew that being introverted, I didn't want to work with people, certainly didn't want to work in a big city like Adelaide, and didn't want to work in an office environment. So with that, I decided that a valuation career in valuing rural farms was the perfect job for me. Went on to do the 3-year degree, got the ticket, and straight after joined the Valuer General. And within a week, transferred to Port Lincoln. So I became a rural valuer and valuing rural property out to Ceduna and to really remote areas. So fantastic, had a ball, but I guess I learned 2 lessons from that. It's really important to have goals. It's a powerful motivator, gives you focus, and I guess gives you a bit of direction. And the second lesson was rural valuation's not as much fun as you think it might be. So I gave that after 2 years, went back to Adelaide with the Valuer Generals, and within 6 months got headhunted back to a company, Value Bullitt Wilkinson, which is a predecessor Knight Frank and joined them as a research manager. So I did 2 years in that. Fantastic foundation job. I mean, so was valuations. Even though it be rural valuations, I learnt a lot out of that process in terms of the valuation process, and it's a good foundation. Research, likewise, was a fantastic job. Some people make a total career out of that and very successful, staying in research. Others use it as a stepping stone, as I did. I know Carmel, who'll talk shortly, started in research. Susan Lloyd Hurwitch, who's CEO of Mirvac, top 100 company, she actually started in research. So it's a good platform if you get the opportunity, or a great career in itself. So 2 years later, moved to Sydney. Opportunity came up, and it was a big decision back then. Sydney was a lot further away back 35 years ago than it is today in terms of flights. And but I thought, well, what the heck, give it a go. If I did it for 2 or 3 years, I can always go back to Adelaide. And 30 odd years later, I'm still here. So it was a good decision. The Knight Frank, I stayed a further 12 years there, did a range of jobs, research, consultancy, advisory. Took a year off to go travelling, got the opportunity, came back. And perhaps the thing that I did, looking back on my career, I did 14 years at Knight Frank, a range of jobs, great experience, but my learning curve did certainly drop off. So you can stay too long in a role, and why is it too long? It's really I wasn't learning, I wasn't being challenged, and if there's something that came out of that, I would say, if you find yourself in that situation, don't necessarily change jobs. Go talk to your boss, or have a change in direction. A lot of companies will find other opportunities, so make sure you're learning and being stretched. So anyway, I was mid-30s, 36. Was feeling a bit flat, so I decided on a career change and accepted a job as a mining analyst at a stockbroker. So that was something that seemed to be a good decision at the time. A problem, however, arose fairly quickly. I actually, a couple of days later, I went to lunch with a guy, Matt Davis, and I went there to actually headhunt him as my replacement at Knight Frank, and the role I was doing then. But unbeknownst to me, he was there to headhunt me for his job. He just had a promotion. So ironically, Matt won the lunch, and I accepted a position head of capital transactions at the Commonwealth Bank in Colonial, and joined that group with Carmel. I think we started a couple of weeks beforehand. So look, that was an amazing time. We did over about 7 billion in transactions over about 6 years. Never worked so hard in my life. Incredibly long working hours. Some transactions were I did literally 30-hour days. So go figure that. But it was a huge amount of fun. It was challenging. It was interesting, rewarding, and amazing camaraderie. The one thing that comes out of there is really, if you do ultimately find a role that you enjoy. It might be a hell of a lot of hard work, but if you're enjoying it, it's not work. So that's important. I think some of the other speakers would have referred to that. So 6 or 7 years into that, I left with a group of 4 others from Commonwealth Property and formed Eureka Funds Management, which is a wholesale funds management business. Very successful, a lot of fun as well. Grew that business to about $5 billion over 12 years. And about 4 years ago, we sold that to the AXA Insurance Group, a large, which has a funds management arm, largest fund manager in Europe, and I've been working a changing role again. I maintain a role in transactions, but also looking after asset management. So 35 years in my career, I never thought of going to asset management, but I've got a strong team there, and again, learning things about asset management that I previously wouldn't have picked up. So last 18 months, why am I still here? I still enjoy it. we've done about $1 billion in transactions in the last 18 months. Student housing sector, a large transaction, last couple of transactions in that sector over the last year. Knew nothing about student housing. It's a new sector. I don't think anyone really did. So been on a steep learning curve. Hotels, healthcare, we've done deals in those sectors. We were actually one of the underbidders on the data centre, the 400 million plus data centre in Melbourne that was mentioned. Obviously didn't know enough about them because we weren't successful, but we gave a fair shot. But it's a look, fabulous industry, a lot of opportunities, a whole range of different roles that you can that will come up, and I think it's a fantastic sector, very exciting sector. So lessons, I guess, a few lessons. First, good to have goals and ambitions. Don't let them close you off to opportunities. They'll come up. They'll come out of left field. Early on in your try and get broader experience. Try different diversity of roles. Be open-minded to travel, change of opportunities, but immerse yourself and don't be too ambitious to be looking for the next job. Learn your current role, get involved in your current role, master that, and certainly as a senior person looking at young people in our organisation, previous organisations, who do you bring through the ranks? It's not necessarily what individuals have achieved, but it's a lot as well about how they go about their job. So attitude is enormously important. I think once you've developed a taste for the sector and different opportunities, and identify really what you like, pursue something that you're passionate about. And I think it's fair to say, and I've said, look, I said to my own kids and a number of young people, I know a lot of successful people, and it's not just in property, not just property managers and bankers and investors, but non-property sectors, even tax lawyers, and that's the most boring sector there is in my view. But there's one common theme that runs through is the successful people love what they do. So because they work hard, it's something they enjoy, and it's important to go through life doing things what you enjoy. So I think one of the things that I remember from last year, one of the speakers said, and I'm paraphrasing, but a career is a bit like travel, that it's not about the destination, it's about the journey. So that's important. So thanks
very much. Thank you, Quentin. That was great. I mean, you're again very humble. You're in a high power position now. Investing billions of dollars, and you started off as I take from your comments, perhaps a shy person doing valuations, and couldn't wait to get out of the big city of Adelaide over to Port Lincoln.
That's about right.
And then even further out to Coffin Bay,
Yep.
where you no doubt had many oysters there. But what you've done is amazing. You've shown our students, or indicated to our students, the importance of being passionate about the work, not being too much of a rush. And clearly the research side of your life has been significant, and that's probably why you ended up in the job that you're in now. So the students that are asked to do research and go away and do research, and, when you complain we don't give you enough leads to where find things, go and find it. Quentin had to. You've got to do your own research. And all of our speakers have to research. So your time at night, Frank, was good for you, no doubt. And also, I guess your trip to Sydney, or your move to Sydney, as you indicated, was a bit frightening at the time. But again, to our students, and it was said yesterday, and I think I might have said today, don't be uncomfortable about being uncomfortable. Get out there and go for it. So thank you very much, Quentin. That was brilliant. And I look forward to giving you a few questions in the next segment. So thank you very much. So our next speaker is Carmel Horrigan. And Carmel, I haven't met you before, but welcome and thank you again. Carmel is the Global Head of Real Estate at AMP Capital. And I must say, Luke Briscoe, Luke, no doubt.
I
yes.
do.
Luke was a student of mine many years ago. Most people have in the whole world. Luke was a champion bloke, and I think he was studying perhaps in the late 90s, and a lovely young bloke. Well, as I said, everyone's young now for me. But Carmel has worked within leading property and funds management companies in Australia, developing broad experience across a range of disciplines and sectors. Carmel has demonstrated ability to manage large teams and, importantly, create a high-performing culture. Over the last 22 years, she has held managing director, CEO and CIO positions in both the public and private sectors. So Margaret, Carmel, thank you again, welcome, and over to you. You've got the microphone.
Okay. Well, thanks for inviting me to speak. First of all, unfortunately, I think it's 28 years now, not 22, so that must be a bit outdated. And I don't think that Quinton Shaw is an introvert, because I was one of the ones that had to work with him in those late nights doing transactions, and he's not an introvert. But anyway, I just put that out there for later for Q&A. So look, I thought I'd take the same approach as Quinton. You can hear me clearly? Yep. Okay, good. And just talk a bit about my career and I suppose the decisions I made and why I made them, and where I got to today, and maybe some of the lessons I've learned. So, and maybe I'll finish with some personal highlights. So I think I'd start by saying real estate is such a great industry to work in. There are so many different things that you could be doing. And I think when you start, you don't realise that, but when you get to this part of your journey, you just think, wow, it's been a lot of fun. When I started, I had no connections. No one I knew had done the course in real estate, and I actually did the course at Hawkesbury Ag in Sydney, Bachelor of Land Economics. No family members had ever worked in the real estate sector, property development, nothing. In fact, the majority of my family are scientists, which is always a bit scary, but they're doing very well at the moment. And so this was a real different career path for someone to take. However, my father actually worked at the university at the time, and I've always worked in a university. So he did see this as a great opportunity for me to put a love of economics and also be able to run my own business. So that was his dream for me, and he had pushed me the whole way through high school, and I was going to run my own business, and I was going to do it by being a property valuer. So this was the way. And he knew the course well because he worked on campus and knew the dean. So that's how I got here. In fact, I wanted to be a doctor, but I just never got the marks. And I did try and go back and do medicine later on as well. So that's how crazy I am about that one. So at the time when I joined the course, there were not many women. I think there were about 115 people in the course, and about less than 15 were women, and not all of them actually graduated. But I have to say, not all the men graduated at Hawkesbury Ag either. And it's been an interesting journey seeing, I suppose, just being a woman in this industry and getting to this level, the changes that we've seen. And I think there's been some really positive outcomes, and you know, this industry has been great for women, and I'll talk about that a bit in my talk. I graduated in 1992, and I started out at Stockland, and at the time there were no jobs. A lot of people didn't get jobs, and I actually contemplated, because of that, going on to do further study. And I was lucky enough to find out there was a job going as a graduate analyst, investment analyst at Stockland. They'd never had one before, and they decided they're going to hire one. And I got that role, and they really didn't know what to do with me, but they gave me every single thing they could possibly imagine for me to do, from retail leasing to toilet paper roll budgeting at the shopping centres, you name it, I did it, and I never complained about it. And in fact, I worked for the first 3 months at Stockland unpaid. So that was what happened back in those days. If you're in probation, often you didn't even get paid. That's something that won't happen to anyone on this course, but you know, you were very lucky to get a job back then. So I suppose lesson one for me is, when you start out, you have to be prepared to do the basics. I do think that some people forget about that these days. Everything you do is relevant. You go through these courses and you think, well, that's actually not relevant to me. I've done this course and I've done these certain subjects, but it is, because even if you're not liking it or you don't think it's relevant, it's actually teaching you something about yourself, and it's developing resilience in you, and also ambition to sort of want to do more. So don't sort of sit there and, you know, make sure you do everything. Then one day, a lady from Potter Warburg walked into Stockland, and she was writing a broker report on Stockland, and that was a new thing for me. I mean, 28 years ago, it was sort of, geez, what's this lady doing? And I was asked to help her pull the data together to do this broker report. And I instantaneously thought, that is what I wanted to do. It was just like a bolt of lightning. I wanted to be in research. I wanted to be in this broking world. I thought it was really exciting. And I don't think to this day realize this woman knows what impact she had on my future career, but I should chase her down one day. So I went, but at that stage I decided I was going to find the path that I could get the same experience that she had and I could get into a role like that. That led me to Rain and Horn. There was a research position that was going, and I left Stockland after 2 years and I applied for that and I got that role. And this was the start of a journey where I met at numerous companies, met amazing people, great network, and I'll talk about Colonial at the moment where I met Quinton. Obviously, I worked with David Harrison at Rain and Horn, and I'm going to be joining Charter Hall actually in 6 weeks with him. So I built these relationships. I asked to do different things. I stepped up and asked the valuers who I didn't even know. I was just this young person, and I would knock on their door and say, can I do a valuation with you? I'll do the numbers for you. I'll do your spreadsheets for you. I'll help you write up your report, anything that was outside my role. But I knew I had to get rounded, and I could see all these things that were happening in these organisations, and I wanted to get experience in them. So I put my hand up for it. So from there, I went on to JLW or JLL Advisory at the time. It was an amazing time in the market. I'm not sure if anyone spoke about that yesterday, but a few people have spoken about it already today. It was when the REIT sector was taking off. I was working with an amazing group of people. I was writing the office reports nationally for JLW, and I was working with Dr. Seek, who later went on to become the global head of GIC, and Mark Steiner and others. So it was an interesting time, and a lot of people from JLL Advisories went their separate ways and went into REITs, went into broking houses and so on. And that was sort of the start of that era, which was really exciting for all of us. So after a few years sort of working there, I thought it was time to move on, and a role came up to work at CBA as the head of research. Stop my video. Yep, okay, don't happen there. And here's my second lesson. You have to follow your gut and don't be afraid to take side steps to get ahead. When I took that role, I cannot tell you the amount of people who told me not to take that role, that I was going to become, I'll quote, a cardigan wearer at CBA. But in hindsight, that was the best move I ever made, moving to CBA property, because it was the right time. There was massive growth. We started with, I think, Quinton, around 3 billion worth of assets under management. And by the time we all separated, there was about 20 billion under management. It was just phenomenal. And the culture, the people, the opportunities we got were significant. And once again, within sort of 2 years of working there, I got the opportunity to step up and be an assistant fund manager on a new REIT that they were launching. And within 9 months, I became the fund manager of Commonwealth Property Office Fund, which was seriously out of my comfort zone. But I knew that's what I had to do if I wanted to actually be a fund manager. And I had decided at that stage I wanted to be a fund manager. So that was really interesting. I loved fund management, and I've stayed in funds management ever since. I ended up spending around 10 years at Commonwealth Bank and then later on at Colonial, and then realised it was time to move. I had 2 children along the way, which was interesting to manage that whole career and having children in a senior role. And, you know, I'd made decisions back then that I think I wouldn't have made now, but I've had a lot of experience in how you actually balance life there with kids as well. And so then I moved on to other companies, and I ended up at Lendlease, and that was another fascinating journey working for a company like Lendlease. The culture was fantastic. And this is where I first got my leadership experience. I started in the company managing around 10 people and their wholesale funds platform. And then I went to managing the asset management and the wholesale platform. And that was about 300 people. And that was terrifying. I had no experience really doing it, but that was the type of culture Lendlease was. They just put you in the deep end and you had to either sink or swim. So look back, that was another great experience. So lesson 3 for me was take chances and back yourself. Particularly in leadership, no one knows everything, and it's a journey. Every time you go to a different company or come up with it in a different situation, you learn something else about yourself and the type of leader you're going to be. And you're going to need those skills, those leadership skills. So Lendlease was great. I worked on some great projects, developed some great investor relationships, had some interesting times with wholesale investors in the Australian market through that period, and I learned a lot. I then went on to work at GPT as a chief investment officer, which was great, working for a REIT like GPT, running at the balance sheet, and then went on to be the AMP Capital Global Head of Real Estate, and I've done that for the last 5 years, and I resigned about 8 weeks ago. So going to Charter Hall, and that has been just a career-defining role for me. I managed around 650 people, and we've built that platform to be about 30 billion in real estate, and got to do some really interesting things. Like we bought a real estate business in the US, a credit and equity business in the US, with CalSTRS, who are a partner. So just once again, I think pushing yourself to the limit in terms of what you're trying to do and what you're always learning. So that's sort of a brief history of me. I think I never let being, I suppose, so some of the females on the call, I never let being a female hold me back. I never found, me personally, because I chose wisely, I never found that the diversity issue was a real thing for me. I believed that I could do the job, and I worked really hard to do it. And I chose really carefully, this is a good lesson for me, I chose really carefully about where I worked and who I worked for. You know, there was many times that you can be offered twice as much money as what you're on, but actually you really need to be honest with yourself about, is that an environment you want to get into or not? And I was really careful. I don't think it slowed me down. I asked those questions before to myself, but I really understood what my weaknesses were, what my strengths were, and I knew where I'd thrive and what I wouldn't. And it was really important to me about the culture and who I worked for. And if that meant less money, so be it. So I think that actually has been one of the best things that I've done to guide me to where I am. The moves, I've done a few moves, and I think that's really interesting for me because I've built a significant network of friends and contacts. And I think you should always remember it's a small industry and you will work with people again. And that's the beauty of the industry, but it's also something to be very mindful of as you go through your career. So make sure you give everything to every role you're in, and you're a sort of you behave yourself in the right way and treat people with respect, because I think it's a very small industry. So maybe some personal highlights for me. I've worked on many different things, and it was interesting hearing Michael and Quinton talk about their highlights, M&A projects, some of those interesting deals that you do. But one of the things that I found really interesting was the roles that I got from being in property that I never would have got the opportunity to do. So in 2016, I went on a trip to the UN with the Property Council of Australia and the Malchamps Change to talk about the property industry in Australia to, I suppose, the 10,000 delegates that were at that meeting, to talk about the Australian property industry and the changes that we had made, and representing all the other CEOs, and the progress we'd made in diversity in Australia. And that was a seriously proud moment to see, people like Alan Joyce and Sex Discrimination Minister and the Property Council talking about how we've done things so well. So there's lots of really interesting things you get to do. And then I think I'd just close on the final point for me is the checklist. I call it the checklist. You have to be thinking about the checklist all the time for your career. So when you set out, you need to think, what are the things that I'm going to need? What are the skills I'm going to need when I sit down for that interview in that destination, wherever you want to be? So if you wanted to be a CEO, what other things they're going to ask you for? And it's really important that you round yourself out and be honest with the skills that you need. So if you get caught in a job, and I think Quinton's mentioned this, if you get caught in a job and you are there for too long, you got to ask yourself, are you boxing yourself in? I've done this job, do I need to push myself to the next level and be uncomfortable and go find skills somewhere else? Do I need to leave an organisation and go somewhere else? And I think that will cause you to be a far more rounded individual, and which is going to be really important. So that's probably where I would leave it. I'm happy to go into Q&A, but I'll leave it at that.
Okay, Carmel, that's fantastic. In fact, I've decided I'd like to do this as a job. This is so interesting, hearing about your life and other people's lives. And you did mention that's a brief history. You've got more in your brief history than 10 people put together, I think. Particularly as you started, you've done toilet roll budgeting.
I have done toilet roll budgeting.
And now I see, and it wasn't in your bio that I read out, but I see that you've also, to give credit to you, you've been recently appointed as Deputy Chancellor of Western Sydney University. Is that correct?
Yeah, I've been Deputy Chancellor about 2 years now.
That's well, obviously this was written 2 years ago.
No,
so
I should update my bio a bit.
No, that's all right.
Fine. Yeah, no, but that's actually that's the one of the highlights as well, because I'm an alumni
it's amazing.
at university.
I mean, you've shown as a advice to students is, try as many things as you can, have confidence in what you can do, and as you say, don't get too stale at a particular job. So spend some time, I guess, a bit of self-analysing, not too much, but some self-analysing, and push yourself, and you can come up with some amazing positions. And you've done some incredible jobs, and still having a massive impact. For the students, you just talked of numbers before, about 115 started, about 15 were women, and when I studied it was about the same, I think about the same ratio. We're now about 50-50, I'd suspect. So the young women doing our course now have a lot of heart and faith that there's immense opportunities out there for you, as Carmel has very adequately demonstrated. So thank you very much, Carmel, for your contribution today. Okay, now we're getting to Caroline Burns. G'day, Caroline. You've got to de-mute. There we go.
I'm off.
G'day. Hello. Okay, so so Caroline is our final speaker in this webinar series, Dr. Caroline Burns. Having over 20 years business leadership experience, more than half of this earned in Asia, she's currently in Singapore. Caroline has earned a global reputation as a corporate real estate and workplace strategy expert. Caroline is the founder and managing director of Workplace Revolution, which is a corporate real estate and workplace consultancy in Singapore. Caroline helps clients manage for change and prepare their organisation to embrace the future of work with confidence. And she is also a graduate of UniSA, just a few years after me, but infinitely younger. So Caroline, that wasn't bad, was it? So
brilliant.
Thank you for your time and sharing with us. And it's over to you.
Thanks, Phil. Actually, I was the same year as Smithy. And our two careers, even though we're both in Singapore, our two careers could not have been more different. And I guess if you wanted someone who kind of is the illustration of the complete opposite of what most property students think they should be doing, I guess that was me. So I'm wondering if that was why I'm last on the list. But I was just wanted to say, I'm pleased that Carmel and I actually colour coordinated our wardrobes before. I nearly wore my hot pink top as well. Luckily though, I did just coordinate with my my jewellery. So it's good to see that, girl solidarity here.
Well, I'm glad, Caroline, from Carmel's point of view, I'm glad you weren't wearing a cardigan.
Well, this is true. This is true.
Okay.
So I guess I sort of wanted to talk about a lot of things that everyone else has said have really resonated with me. And I guess I wanted to structure what I was sharing more in terms of themes. So I'm going to just do a really kind of brief kind of history. And then I really want to talk, I guess, about learning, attitude, leadership, and then kind of life. So hopefully I can get through all of that in about kind of 10 minutes. But I guess the history of my career is kind of like should be dubbed the no plan, because I've been complete opposite of a few other people here. As I mentioned, I graduated the same year as Smithy. I'd done an architectural degree before that, which is probably why I went off in a different trajectory. I was going to be an intern at Collier's, and then the arse fell out of the market. Smithy got his scholarship. Congratulations again at JLL. I think that was the start of his career trajectory. I suddenly didn't have the valuation job that I thought I was going to have. I was going to be a valuer, and then I was going to be a property developer and use my architectural degree. So it was a very early lesson in life does not deal out what you think it's going to deal out. So I ended up moving to Woods Bagot, who are, you probably, I'm sure, have heard, a major architectural practice, and became a facility manager. I had no idea what that was. And in fact, even about 8 or 9 years later, I still had no idea what I was doing and felt like a fraud. I stayed there for a little while, and they moved me to Sydney about 6 months after I graduated. So I had just time enough to buy a car during my exam periods and do a little bit of work, and then off to Sydney, which was fantastic. And had great ambitions also of moving to Asia. And it actually took me about 15 years in Sydney before I got to Asia, but no regrets there. After a few years, I started my own business. I'm really a pretty shitty employee. I've tended to run my own business through most of my, sorry for my language, guys, through most of my career. Along the way, I did a PhD at the University of Sydney School of Business. It was very much a sort of organisational management PhD. Stints at JLL, and that really exposed me, I guess, to being able to get to Asia a little bit more. And then had the opportunity to move to Asia or to Singapore in late 2007 with a company who doesn't really exist anymore, but were called Guy. They're an interior design firm, mostly in corporates. And that was in 2007, and they wanted me to go up there and essentially start their Asian business, which I did. And then about 5 years ago, I started Workplace Revolution. So that's kind of where I've come from. But I guess one of the things I've learned all along the way of my no plan career is that you don't learn from success. You only learn from your mistakes. And I think, you know, again, given the pandemic that we're in at the moment, and if you guys can kind of reflect on what this kind of means for you and how either you've been studying or if you're working or doing some part-time work as well, what you've actually learned about the way that you work, what makes you most effective, what's been easier for you, what's been harder for you. Even through this experience, use it as an opportunity to learn. Use it as an opportunity to reflect on some of those things, and they will probably help you transition to whatever that next phase is as we kind of come out of lockdowns. And I know Adelaide, you know, it's been pretty kind of light on in terms of lockdown. And take that kind of awareness of the conditions under which you're most successful and use that to make kind of smart choices as you go through your career, which is probably similar to some of the things that Carmel's been saying. And I think around that, a lot of that comes down to attitude as well. Attitude is absolutely everything. You know, when I've been an employee, when I've been a coach or a team leader, and, you know, very much, I guess, as an entrepreneur and you know, business founder and an employer as well, attitude is absolutely everything. And every downside has its upside. And you know, again, I learned that pretty early. I really enjoyed, I guess, the bizarre sideways direction that my career went in terms of facility management that then became kind of corporate real estate strategy and some of these other areas. So in all of those sorts of things, as I said, often the unexpected will turn up where you think something is not being necessarily particularly positive. And on that, you know, I think, you know, everyone pretty much, it didn't happen, I guess, sort of in our time so much, but expect to be retrenched during a career. There's no shame in that. It's generally not a reflection of your capability or performance, or maybe it's actually a positive one. It happens a lot. It actually happened to me twice. And I'm saying that because I'm not, you know, kind of ashamed about it. Once was political. I was aligned with the wrong director. And one was economic. But in both places, I wasn't happy. And both times it was actually the push that I needed. And in hindsight, I realized that while I did need some kind of transition role between two major phases, it was only ever supposed to be temporary. So let it go. No one gives a shit apart from you. So having a good attitude, I think, is really important, no matter what career or life kind of throws at you. And out of both of those came transitions for me that were into two of the happiest and most satisfying and challenging phases of my career. So absolutely no regrets. And as I said, the attitude is kind of really important. In my role as being, I guess, a leader with a fairly large team, we built Workplace Revolution 5 years ago on a digital platform to be a global community of consultants, some of whom are dedicated and full-time, some of whom are kind of partners who also do other things. They may have other businesses, they may have other family things or other things that they do as well. But the desire was to build a team of people who were essentially a whole lot smarter than me and a lot better at a lot of areas that I'm really not very good at. I'll talk about that a little bit more in terms of leadership. It's really important, I think, you know, whatever role you're in, you know, even if you perhaps in the first 5 years of your career start to kind of manage a team, build a team who are great at what you're crappy at, and be honest about what you're not good at. You know, it's not going to threaten you. If anything, it will amplify what you can do and your ability to be successful. And treat people like adults and not school kids. That's a big mantra in our organisation. People are not school children. You need to trust them, but you need to hold them accountable. And again, I guess I'd say, particularly for the younger generation, and I mentor and coach a lot of people in their kind of 20s and 30s, and I've employed a lot of graduates directly from university. You're not entitled to anything except trust and respect, and you have to earn both of those as well as give it. So that's really important, but you will generally be hired on your attitude. I would hope more than your intelligence or what you actually know. There's a lot you can learn on the job, but you can't really learn attitude. So a good employer will always look for that. And I think, you know, in terms of that, I guess one of the things I've learned in terms of leadership is it's not about power or status. It's about trust and self-awareness and humility. When I moved up to Singapore to start Gaia, I came up here with a laptop and a business registration and a very, very confident and trusting CEO and board back in Australia. And I moved up just as the GFC was hitting, and our first major project was supposed to be a banking and financial services client, so that went down the toilet pretty quickly. But we managed to hold on, and within a sort of 12 to 18 months, we'd gone from 5 people to 40 in terms of employees, and they were all direct reports to me. And I really lauded my senior people, but I wasn't delegating management responsibility to them. And some feedback came back that I was being perceived as being too controlling, not enough kind of understanding. And it made me realize that I was still trying to treat a business of 40 people like it was a business of kind of 4 or 5 people. So I promoted my 5 senior team leaders to associates. I gave them direct employee reports, so then I only had 5 or 6 direct reports. And we had weekly meetings about people and culture, and you know, we worked through those things together, and it made a huge difference suddenly in the business. And I could then actually focus on growing the business and not on managing people and managing, you know, every single issue. I'm sure as everybody else who's spoken, you spend enormous amounts of time managing people and not actually often doing what you love and what you're potentially really good at. So that was a huge lesson for me. I hadn't really accepted how much my senior team had grown, particularly while they'd sort of been with our business. And that also through not delegating, they thought I didn't trust and respect them. So huge lesson in terms of leadership there for me in that. And I think, you know, in terms of leadership, there are obviously many ways to lead and different people lead in different ways. And I think that the pandemic and the conditions that we're under at the moment has certainly put a bit of a spotlight on leadership. There's a lot out there in terms of what kind of leaders may be more effective in future. And I think, again, it comes down to a mantra, I guess, that I've never forgotten, as I said, is, you know, trust and respect. Doesn't matter whereabouts you are in your career as a leader or as an employee or as a colleague. If you both earn and give trust and respect, that's really important, because Carmel touched on this as well. People will go from being your boss to being a client, to being a competitor, to maybe being someone that you employ, to being a colleague, and then back again. This is an extremely porous and flexible industry now, and the boundaries between who's a vendor, who's a supplier, who's a client, are really blurring. So don't burn those bridges. Trust and respect are incredibly important. And I think just sort of the final thing I wanted to touch on a little bit was, don't forget to create a life along the way. You'll be better at everything if you actually have a life. Life experience builds overall experience, and really, really importantly, it builds emotional intelligence, and that is incredibly important, particularly if you aspire to you know, a leadership position or a position of some kind of trust or authority within your organisation or one that you build. That emotional intelligence is really important. And I have to say, I'm probably still an emotional retard in many ways. They are hard lessons for me, and I'm still learning every day how to be a better boss, a better friend, a better wife, you know, a better colleague and a better mentor and a better support to my team. but that's, you know, that's really important. And I think that emotional intelligence and that ability to empathize with people will hold you in really good stead. And again, you know, the current kind of pandemic, I think, has really lifted the lid on mental health issues, and particularly stress and dealing with uncertainty and anxiety. And these are times where we really do need to draw on that, that emotional intelligence, that inner strength, and empathize with other people, and not look at other people as having problems, but try and support them through challenges that they might have. And that's a really important part of being a leader, and particularly having a business that completely relies on the quality and the passion and the commitment of our team to provide really fantastic services to our clients. So it's really important that I look after them. So not forgetting to create a life along the way is really important in terms of that resilience and in terms of that emotional intelligence. And again, I guess I completely disagree with or have a completely different philosophy to Quentin and perhaps Carmel along here. You can't plan happiness and success. You kind of find it while you're living your life. And I found that I haven't been able to expect to love what I do in every role and every stage with a passion. Like a marriage, I think a long-term career love takes effort, it takes compromise, it takes humility, and it evolves and changes shape over time. I've had a love-hate relationship with my career. I love what I do now. I love it in a very different way to what I loved what I was doing 10 years ago. And I love it in a very different way to how I loved what I was doing 20, 25 years ago. So expect that those things, I guess, will evolve over time, and that you can't necessarily always plan that. If you have a full and robust kind of life, you should find happiness and success will kind of come to you as you go through that. So I guess those are sort of the themes and the lessons that I've learned as I've gone through. It's been probably a totally different career, and I'm probably the only person who hasn't mentioned billions of dollars on this yet, and I'm not going to either. But anything is possible. You can take this degree that you've done, take the networks that you have, and take it in any direction that you want. And I think in, you know, your generation, 20, 25 years younger than us, you've got even more opportunity to do that than we had. So I guess if there's any inspiration in what I've done, then that's fantastic. Thanks, Phil.
Thank you very much, Caroline. That was brilliant. Very inspirational indeed. And I love your no plan. I love your honest language and the honesty about yourself. You know, it's been very enlightening. I mean, one of the pleasures I have as being a lecturer is talking to students about their careers and so on. And so many, you know, are reluctant to take a particular job because there's sort of an implication in their mind that's their whole life going to be in that. Whereas I've learned from you and many others that, you know, life evolves. On the one hand, you're saying that, you know, we need to be prepared for changes and perhaps not be too harsh on ourselves to let things evolve, which I like. And the life experience too, you know, getting a life. I suppose that's what you're also pushing, to be patient with yourself and to push where you can and not be afraid, as I've said before, don't be uncomfortable about being uncomfortable. So I really appreciate your time. So thank you very much, Caroline. And it's good to see you again. Thank you so much.
Thanks, Phil.
Okay, all right, now we're going to move on. Now we've got a few questions for all of you. How's the vodka up? Or is that water? Yep, okay. I'll leave you for a moment, Caroline, but Carmel, these are questions from students that I've selected. Would you be able to share the most challenging task and or experience in your career, and how did you overcome it? We probably won't concentrate on the toilet roll budgeting, but anything beyond that perhaps? Although at the moment, of course, with this crisis, toilet roll budget would be queen or king.
Yeah, that's right. Oh, look, I think COVID's been really challenging. It has, but there are also aspects of COVID which, because we're all acting together in COVID and we're all trying to solve it, there's been aspects of COVID where the industry has worked together and has got things done that we wouldn't have done in the past. So although challenging, and from an economic point of view, it is a real issue for all of us, I still don't think it's the most challenging thing I've had to personally deal with in my life from a work perspective. We've had some really challenging things. I think Quinton will probably laugh when I say this, but we had, when we were at Colonial, gosh, we had some really challenging events in terms of M&A, being sort of in an M&A situation for a period of sort of 3 months when we were working on a potential merger, and Mirvac came in sort of 2 days before the end of the, all the votes were in, and started the whole process again for another 6 weeks to 8 weeks. And, you know, the whole industry was involved, and everyone in the whole industry had a view, and it got really personal. And I found that confronting, you know, running the office fund at the time for CBA. And once again, it goes back to culture and team, and it's never one person who runs these funds, or, you know, it's a group of people that are actually making decisions. But that was confronting. You know, I think every day you felt you're out of your depth to a certain extent, but it was a very fast learning curve. So for me, that would have to be one of them. And then the other one for me, which the highlight was, I wouldn't say it's a highlight, but it was certainly a learning experience, was the GFC, where when I went to Lend-Lease, about 3 months after being there, I realised that there was not a lot of debt lines in place, and there was a lot of construction activity underway. So we had to try and find, for projects that had already started, try and find a lot of debt lines, and that was confronting as well. It sort of became my job for 12 months. So once again, I remember going home to my husband saying, geez, we need to start growing a vegetable garden in the backyard, save all your money, this world's falling apart. But it ended up being, you know, an interesting, a great learning experience. I don't think I've had anything as confronting as that to deal with. So it just proves to you that when you're in your deepest, darkest moments and you think, oh my God, how are we ever going to get out of this situation? People come together and they can solve it, and you walk away 6 months, 9 months down the track and think, geez, that was such a great experience, learning experience.
Yeah, a lot of self-belief and acknowledgement that a lot of other, I mean, I often say to my students in property situations, there's no better person to make a decision about property. A lawyer's not better, an accountant's not better, an economist's not better, but you with the property knowledge is better. So in that instance with your situation, I guess you had the confidence that I guess you had to address it, but you had the confidence to carry it out and feel damn good later that you'd accomplished.
Yeah, I wouldn't say I was full of confidence at the time.
No, but I suppose confident enough not to walk away.
Yeah. Well, got to dig in, right? Can't walk away.
Because the vegetables, you'd only have the seeds at that stage. They hadn't even grown, had they? Yeah,
I'm not a vegetarian, so I knew I had to get some meat on the table somehow.
Michael, you've had a bit of a rest for a while. Michael, I'm interested to hear that you're building offices, and as you quite rightly would say, that, you know, this is out of the square a bit, isn't it? So why do you think offices are great at the moment, and all these sort of common thoughts about maybe people won't go back to their offices, or those that do, that may then have to come back once a week, so instead of renting 1,000 metres, we'll only want 200 metres. Tell us your secrets.
Secrets, and Caroline's the expert in terms of corporate behaviour, but I think, you know, there are certain sectors, technology, healthcare, pharmaceutical, which, you know, particularly on the R&D side, there are just certain businesses that need to have an office. Very hard to do research and development from your house. It doesn't work right. So as long as you've got the right covenant and you're in the right location, we don't own any buildings in the downtown areas. I mean, this is one of the buildings here. We prefer the more suburban, decentralized locations where there's lots of car parking. And that's been a theme that sort of works now. People don't want to catch a tube into London or into New York, spend 2 hours on public transport. They would prefer, if they could, to be in, we own a big business park in Reading in the UK, and, you know, that preference of not being on a tube, we're getting a lot of tenant interest now of not being in London City, but being out in the more suburban locations where you don't have to, you can save commute time, etc., etc. So I think it is a little bit, you know, it's not convention, but then we haven't been a conventional investor, and we're taking big bets in Silicon Valley and Raleigh Durham and Dublin and Warsaw in in these type of businesses, because we think there are certain occupiers who still need an office location. They just may not want to be in downtown. So it's a little bit on the edge. It's not buying big shiny trophy buildings.
And they are pre-committed buildings, is that correct?
Yeah, long-term leases to high-quality covenants, and these tenants. If it's Microsoft who's bought a building on the east coast of the US, Microsoft did a 10-year lease. It's $1 trillion company. They spent a lot of money in the building. They're not going to go anywhere.
So has the COVID changed the design of buildings? For instance, I heard the other day someone in Sydney said if BHP went back to work, it'd take an hour to get up the lift with only 2 people in the lift. So how do you accommodate that in an office building design now with COVID? Now it might all be over in 6 months, or could be over in 10 years. We don't know, do we?
We don't know, but I guess we've been lucky that we've been buying and developing sort of low-rise, decentralized office with lots of car parks, as I said, not 50-story sort of monoliths to the architect, but the more practical sort of end users who want to have more space. They want to have a more garden setting. They want to have a more campus-style office approach. And that's sort of a thematic that's working across right now. But Caroline's the expert. You should ask Caroline corporate behaviour.
Well, Caroline, there she is, the WPR team. Caroline, so has it changed? Well, maybe you talk a bit about green buildings and the desire of tenants to get into green buildings. I mean, there's plenty of chunky papers, research papers on whether or not, in fact, it creates a better return. You may not be able to answer that, but what sort of impact is there currently with the green building sort of thought process and well-being within buildings and the wellness and the Green Star ratings and neighbours ratings and so on?
Yeah, I think there is a link obviously between, there's a huge focus obviously on wellness at the moment, and that's been bubbling up for the last decade or so. I think certainly there's a strong link between that and sustainability in green buildings. I think Australia's generally been, it's obviously a long time since I've worked in Australia, but I think somebody would agree with me that Asia's kind of in many ways been lagging on the green buildings idea, although it's caught up very, very rapidly in the last probably 10 years or so. And there's a huge focus on that now. I think from the perspective of organisations as occupiers of various different spaces, whether it's in a traditional lease, whether it's through co-working, whether it's through other kind of hybrid or satellite offices, however they might occupy buildings, certainly there will be more of a focus on how do they provide an environment that benefits their employees, that benefits the broader community that they're in, and that provides broader benefits to other stakeholders. So we're, I think, hoping and potentially seeing the signs that as a part of the pandemic that while shareholder value is still important, there is also a desire to create societal value and kind of employee value out of corporate real estate. So definitely, the link between, I think, buildings, obviously commuting is a huge thing. And I think, Smithy mentioned, the car parking, and that's obviously a huge thing at the moment is people wanting to, be able to drive to work and avoid public transport. 6 months ago, though, we were talking about the ability to get a whole lot of cars off the road through driverless cars and how good that would be for the environment. Now, I think we've all benefited from bluer skies in the last 6 months just by having a lot less cars on the road. But how we actually emerge from this and what sort of innovations and technologies are created that combine the ability to both be relatively good for the environment as well as relatively good for employees is going to be something I guess we need to wait and see, because it's very, very different for all of us who work in kind of regional and global roles. What we're seeing in different locations and different places is very different. There's not a one-size-fits-all approach to how we're going to come out of this at the moment.
And I guess it'd be fair to at least think that COVID virus would have created a greater attention to the wellness of a building, that we've a greater awareness of our health. And so I suppose that will be having some impact on designs. And of course, if it's better for the employees sitting in the office, there's a greater likelihood there'd be less vacancy in the building, shorter letting up periods and so on. We're getting valuation stuff there now, aren't we, Caroline?
Absolutely.
Yeah.
Yep. Love it.
Okay, so thank you very much for that, Caroline. Now, Quentin, just a question for you, and then I'm going to round up with just a brief sort of a summary from all of you about your advice for students, so those can think about that in the meantime. Quentin, here's a question from a student. Each role or / position has some favourable and less favourable things to do. Would you please share the most exciting and the most avoidable works? I suppose that means work situation in your, what's the best and worst in your position?
Okay, best and worst is interesting. I think, look, I suspect start with the worst. And for me, and it will vary from as a personality and individuals, but it's the challenging people management issues. And Caroline said, yeah, a lot of people will get retrenched in their career. And I had 2 people who I worked with very, very closely, who reported to me. We worked for many years through the thick and thin of transactions and a lot of hard work. You become friends with your colleagues. They are good friends over the long term. And the hardest by far was having to sit down with them and tell them that you're retrenched. You know, you don't have a job any longer with the company. So that incredibly hard. But you know, yeah, to be honest, they weren't surprised when it finally came down to it. They said, well, actually, one of them thanked me for being able to stay on as long as he did, because he was coming. But that is really tough. I think you're dealing with people's private lives, you know, and their careers. So I think that's the probably by far the hardest. The best, I don't know. That's a really hard one. There, it's a mixed listing in transactions. I've been fortunate to be involved in a lot of exciting, I'll say exciting deals, but you know, it's often when you're shortlisted or you are selected as successful on a transaction, great moment, and then all of a sudden you got to roll up the sleeves and convert that. So it's a very short-term side of transactions. But look, I think the key part to me is it's not what you're doing. It's like a lot of things in life. It's not what you're doing. It's who you're doing it with, and it's about your colleagues and getting out there. And you know, you can have the most successful piece of work ever. If it's on your own, you're in isolation. Then I don't see how you get a buzz out of that. It's actually working with a group and achieving something as a group, and then going out and celebrating those successes. So I think that again comes back to that point with the right personality. You know, it's so important when we're interviewing people. By the time you actually get to the interview, you've decided, you've seen the CV, you know the skills that they have. It's not about skills or experience. It's about, will I be able to work with these people? Will they fit into the group? And that's crucial in small organisations.
All right, Quentin, that's great. Thank you for that. And that's good for students thinking about their CVs and resumes and interviews and so on. Just on individual delight, of course, when you hit a really low score in golf, that's pretty individual. I love that, though. Anyway, look, just to wind up, I'd like a very brief word of advice for all of you for our students doing the property degree, or in fact, it could say any degree, because we do have some finance and economics students also watching this. But just as a bit of advice for students in this current world, I'll start with you, Carmel.
Yeah, look, I would just say be patient and just get yourself into a role. And if you have the right attitude, which I agree is absolutely important, and you are willing to work and you show that work ethic, and you're ambitious, you will be successful. So just be patient.
Be patient. Thank you very much. Michael, what about you?
It's all been said before, and it's a bit cliche, but there's no substitute for hard work. You know, you've got to roll your sleeves up and work hard. Don't burn any bridges. I think Caroline and Carmel mentioned, you know, you never know where people show up and in what part of your life. And if the window's open, take it. You know, follow your instinct, be opportunistic, make the best you can.
Thank you, Michael. Caroline.
I think building on the others, you're not entitled, as I said before, you're not entitled to anything really apart from trust and respect, which you need to earn and give it. And that success has many forms.
That's great. I like that lack of sense of entitlement. I think that's really profound. Quentin, you're the last opportunity, the last seminar. It's your stage.
I think really is don't go into any roles with preconceived ideas. You know, they both on the positive and negative. They treat the opportunities as they arise, and yeah, don't turn down an opportunity because you've got prejudice or misunderstanding of what the role is, and the reverse is true.
And go for it. All right, well, thank you very much. Look, thank you, Caroline, Carmel, Quentin and Michael. It's been a fantastic session. I've really enjoyed it. As I said, I'd love to do this for a living. It'd be fantastic. So I'd like to thank you all, particularly for your time and your passion that you've shown, and a great direction for our students. The students really love hearing from practitioners, and it becomes more and more difficult at uni to bring in guest lecturers, particularly with the COVID and so on. And so this is a really, really good second best. Of course, they can't see you all, you know, where you're located from our uni if it was face-to-face anyway. So thank you very much for your time and sharing your journey. So I'd like to thank everyone today for joining, not only the speakers, but those that are registered and have been watching. It's been a great exercise, I think, and I know that all of our viewers have really enjoyed it, particularly from feedback from yesterday. So thank you very much. We'll conclude now and enjoy the rest of the afternoon. Thank you.
Thank you. Yes.
Take care.